go. Happy Monday.
Yes, sir.
Woo! What a crazy weekend, man. Whoa. Everybody, this is Hector. Say hi, Hector.
Good morning.
Oh my goodness. Dude, I didn't manage my time well today. My morning got away from me. And I started doing all sorts of stuff. I got out of the gym and I am not even stopping my spritzing yet. So my body still needs to cool down. So maybe in the next half hour. Hector, tell me about yourself.
How are you? Hector Ramirez. I'm a branch manager here in San Jose for Cross Country Mortgage. Born and raised in the Bay Area. And I've been doing loans now for quite a bit of time. So I don't know,
long time.
About 10 years.
I
was involved in real estate before that, and transgressed into being a mortgage lender.
Cool. And you and I met, I want to say like 6 or 7 years ago now, right? I mean, at the gym, right?
That's right.
We were doing the boot camp, and next thing you know, you're like, hey, you're a realtor. I'm like, oh, you're a lender. Stay away from me.
Goodies.
But then afterwards, we became pretty good friends, and both of us have twins.
That's right.
Right. And so today we're going to go through and talk a little bit about what's going on in the market. And, Hector, being as experienced as he is, I want him to jump in and say, yeah, dude, you're full of shit. Or, yeah, you're kind of right on track, right? So I noticed over the last week, rates went down. Rates went down a little bit.
Yeah, a little bit. I mean, we're kind of in what we find is that even these kind of changing markets, like rates are going to move, right? And what's funny is they move based on a lot of speculation, right? Every week, different reports come out, and really rates react to that, right? Yep. Banks know what's coming ahead as well, and so a lot of times, in terms of the actual rates that are being put out by banks, I mean, the volatility is kind of already built into it, right? So, but you will find that from week to week, sometimes from day to day, especially over this past year, we have experienced some volatility in the market, right? And so, every day is kind of a different day for us, which has been quite a challenge for most mortgage lenders this past year.
But so with all that said, I noticed I do my weekly, days on market report, which is expanded into way more than just a days on market report. And I'm looking at days on market. It's kind of still going up, and I see velocity, meaning homes going into contract and actually closing, actually going up, which is the opposite of what I would expect. Right. So people are going, hey, the market's not so bad. The rates that we see is not historically high, like 10 and 18%. I better jump into this market now while the rates are decent, because next week, or this week actually, right? Something's going to happen on Thursday. Is that right?
The 27th, the Fed will be meeting again. And, that is always a market mover. In fact, over the weekend, I mean, there was some type of speculation that they would not be raising 100 basis points. And today the bond market's down about 30 points, right? So contrary to most belief, when the Fed raises rates, the whole goal or strategy behind that is to control or reduce inflation, which, as we know, is like, 40-year high right now. Last week, the CPI, I think, was at 9.1%, right? So, the Fed's been raising short-term interest rates over the last few months, and they gauge it the following month to see, what effect it had on the market. And the reality is it continues to climb. And so while that continues to climb, they're going to continue to raise short-term interest rates. And so that's the expectation next week. How much, we're not exactly sure yet. The reality is the more that they increase it, the better our mortgage rate should get, believe it or not.
Right. And if they go, so I've been reading news here and there, and what I'm hearing is rates are going to go up, or the Feds are going to raise the rates 0.75 basis points.
Yeah, that was what kind of came out today. Some type of speculation, some type of rumor out there. So.
And some of the people that I'm talking to are, I don't know, I don't want to say that they're spreading rumors. I'm more like saying, hey, they're just speculating, because that's what they're hearing from some parts of the media, and everybody knows how I feel about the media, but they're saying it could go up actually a whole basis point, right? I mean, what would that mean?
To be honest, that would be a good thing, right? So we really want to curb inflation. As you know, it's really become, it's kind of affecting every part of every household, right? Almost every industry. And so that is the goal. And as crazy as it sounds, that 1 point over 100 basis point increase would likely be very good for the mortgage industry, for mortgage rates, I should say. So, it's actually welcomed, and we're kind of hoping on that.
Mm-hmm.
What actually transpires, we'll find out.
Good. Well, I'm excited to see what happens, because honestly, we do need to normalize this market. It's been too hectic for far too long, and now I have a lot of people on both sides, right? Buyers and sellers, and we're talking to them. They're like, "What should I do? What should I do?" I'm like, "Look, the market is what it is today. Tomorrow it could change. It could go up or down. We could go, 15 minutes into that 1% or 100 basis point increase, and all of a sudden the market completely flat lines, or everybody's like, okay, now you know what, the pain is here. A week later, everybody's like, that's the new normal. Let's just start buying houses again or selling houses again." Right. And I think that's what's going to happen, and that's really what happened over the last month, I guess. After, when was it, like June 15th or so, just June 16th, when they raised it up, right, it pretty much flatlined the market for about 2-3 weeks, and then all of a sudden it's like, okay, it's normal. Sucks, but it is what it is.
Right. It's really becoming more of a normal market. I mean, this is actually a really similar market to what we experienced in 2018. At the time, a lot of folks said, "Oh, it's a horrible time to buy," right? And if we were to go back, I mean, I think, gosh, who wouldn't want to buy at those prices and even at those rates, right? So it's really all perspective, and I think what's happening, we hear a lot of this changing market, and really I think we're just becoming more to normal, more to a normal market, right? Which is really healthy, as you've alluded, and I think it's really important right now. I think for buyers, I think there's a tremendous opportunity. I know for sure that this is probably the easiest time to buy right now that we've experienced in 2 or 3 years.
Right.
And the fact that we can get in and get you a home, close to asking price, and the fact that we're able to negotiate is huge. We tend to be caught up in rates, right? And the reality is rates, as you mentioned, are going to go up and down, right? And but if you're working with an advisor and you understand the benefits of ownership, whether it's up a little bit or down a little bit, it really doesn't matter. If the value of buying is there, then you really want to take that opportunity and buy, and understand that there will be opportunities down the road to reduce your interest rate and lower your payment.
Right. And I talked about this chart. I don't know if you can see it, but I talked about this chart last week, and right now we're right. Can you see my cursor?
Yeah.
We're right here, right where it says less competition, right? The market's kind of peaking. We don't know if it's going to go up or down, but there's definitely a lot less competition in the market, which on the buyer's side, if you have a house to sell, this is a perfect time to sell. You're not going to get the highest rate or price, but you're also going to be able to go in and negotiate a lower price or a moderately priced deal on your next house, right? You don't have to pay a premium. You don't have to pay higher closing costs. You don't have all that stuff. And you can go in with contingencies. Right. So, I have a client that we've been working with for a couple of years, and they've been struggling because they need to sell their house in order to buy their next house, and they've been stuck, and now they're like, I don't know if we should do it because the market's going to go down. Well, then I tell them, if the market does go down, then the investors come back out in droves, in massive waves, and then you have more competition. So,
right. It's like 6 months ago, everyone was trying to buy and you were going up against 10 people, right? Plus, right. And then now we're down to a normalized market. Sellers are somewhat panicking and at least becoming more realistic. And now we have the opportunities, and now we have buyers still waiting on the fence going, well, I don't know what's going to happen, right? And so it can be a little bit frustrating, but it's just important to kind of take some of that emotion and fear out of it, a lot of it, which is instilled by the news.
right.
And really just look at your own particular situation and see if it makes sense for you.
Right. And, the other thing that you have to calm yourself with is, outside of the fact that this is historically crazy as far as the increases that we've seen over the last 2 years. But if you see this graph,
Yeah,
if you buy today, your market will normalize. This price is going to come down a little bit. At the same time, this chart right here is probably going to go up, or this line is probably going to go up a little bit, because right now it's about 15%, and I can see this normalizing to 18%. When back in the day when I first got into real estate 20 years ago, they're like, the standard inflation is 8% or 8.5% over year, and that's the green line. So that hasn't really been true since 1980. So my thoughts are, you see the lines, the standard lines, right? They're continuing to go up year over, or decade over decade, and I think the next one is probably going to be, going up this way. But who knows what's going to happen, right? We can't tell the future. You like my protractor?
I like it.
Yeah. So
both lines, I mean, just like the real estate market, both lines are moving in that same trajectory, right? And so,
yeah,
I mean, it's pretty telling that it's going to land somewhere in that range, right?
Right. And then if the market,
that's the consistency of real estate, really, right? That everything kind of moves in that trajectory.
well, I think that's why the majority of people were taking all their money and throwing it into real estate over the last couple of years, is because they knew inflation was going to be an issue. And the best hedge for inflation is real estate and then metals, right?
100%.
And there was some talk about crypto, but look at what crypto is doing right now. So,
yeah, I mean, the equity markets and crypto alike have been just unbelievable, right? And I mean, that actually held some folks off for a bit too, just because obviously their gains were so strong. We've seen a lot of that has deteriorated over the last few months, kind of creating another set of, kind of like problems for buyers. But that's maybe for another episode.
Yeah. I know you have to bounce pretty quick, right?
Yeah, we're good. I've got it.
Okay. Yeah. So, some of the stories that I've been bringing, these are my personal experiences, and this is me saying something in the beginning. I have a set of buyers. We're trying to buy a house down in San Juan Bautista, and they just absolutely refuse to budge on the house. So
I'm hearing a lot of that from a lot of real estate partners, really, right? Where they have a seller, and they're having they're having a difficult time getting them to understand at what price they should sell for, right? I think like we've got, as just humans, we've got such like short-term memory, right? And it's like we want to capture the very highest that any house has ever sold for, right? Like in our neighborhood or community or city. And the reality is that time has passed. Like, do you think it's still a good time to sell though? For instance, like I talk to buyers all the time, but not as much sellers. Like, and what's your opinion on that? Because I hear that all the time. Like right now, with houses, with even homes for sale getting offers and sellers not willing to accept them. We're seeing days on the market increase. We're seeing houses come off, right? Where basically a seller's, dipping their toes in the water and testing it. And in some cases realizing they don't want to sell. I mean, what's kind of like in short, what's your advice to that? Like someone, like
Right.
I can tell you all day if it's a good time to buy, but what about a good time to sell?
It's actually, so taking ego out of the whole picture, that's the great segue to the next bullet point, right? Needs versus wants. Those wishful sellers, the guys that are like, hey, my house is worth $600,000 more than what it really is. Those guys are going to finally get exhausted. They're going to be pissed off at the agent, right? Because it's always the agent's fault. But here's the thing, right? And I actually talked about it last week. Where is it? Where's my little slidey slide? Right here. When you sell your house in a hot market, you get a higher price, right? I mean, it's not the agent that's saying, hey, guess what? I just got record rates and blah, blah, blah. So the agent gets paid to keep the deal together and to close the deal, right? Because there's always going to be hiccups. There's always going to be bumps in the road. There's going to be buyers that wane and change their mind. They freak out. It's the experienced seller, the agents that work together that are going to keep the deal together and close it. And that's what you pay brokers for, real estate agents for. But let's just say you need to sell and you're like in a hot market. Yeah, you get a great, huge price, right? But you have higher closing costs. You have to pay me more. You have to pay the buyer's agent more. You have to pay Uncle Sam more. You have to pay everybody more. And then you have to go and buy another house. And that means you have to go and take that same huge fat hunk of extra cash that you got from selling your house and put it on the next house. So it's kind of like a chain reaction, right? Which hurts first-time buyers. It helps people that are relocating. It hurts all sorts of things. But you also have more competition. You're paying that premium, which is that chunk of cash that you just brought over. And then you have more closing costs and you have higher property taxes, and that's been my frustration working with some of my clients that have to sell their house and buy their house. They're like, I'm just not going to put $400,000 over on a house. I'm just not going to do that. So they're seeing the housing market kind of go up, but they're also not competitive. They have to have, I need to sell my house contingency, which puts them at the bottom part of any stack of offers that come in. And then you have the opportunity to sell in a market like right now, where, like I showed you here, you're right at this plateau. Right? We're at the plateau. We don't know if it's going to go up or down, but there's definitely less competition. I mean, there's so much less competition. 18 million buyers have exited the market simply because rates went up and it made it less affordable to them to buy the house that they want to buy or need to buy. So if you're still in the option to be able to buy a house, yes, you're going to get a lower sales price, and that's boo, right? That's like, yeah, that sucks, but you might lose a couple $100,000 because the market's contracted, but that also means you have lower selling costs. That means I make less money, which is actually a good thing for you as a seller.
But isn't it kind of relative? Like if you're selling to buy, I mean, it's kind of like you buy high, you sell high, you're buying high. Let's say right now that you're not quite as high,
right.
But you're still selling, and then you're buying, so you're. What I think you kind of lose on maybe the selling side, aren't you maybe capturing it on the buying side by being able to negotiate and get close to asking? I mean, it's kind of like for people that are buying and selling, I think it's kind of a wash. I mean,
well, this is where it comes in, right? If you price your house right and you sell it and you have a golden deal, then you can go to the house that you want to buy, whether it's in Tennessee, Florida, or right down the street. You can go say, hey, Mr. Seller, I need you to help me with closing costs. I need you to help me with point buy down. I need you to help me with all these other things. I'll give you the price. I don't care.
Sure.
Because at the end of the day, your yield, your actual cost
override is going to be the same or better. Yeah.
It's going to be a lot better than what it is if you just buy, say you get $25,000 or $50,000 off.
Are you seeing a lot of that in offers?
It's coming now. Yes.
I mean, I know those are strategies that we've been talking about for a couple months now.
Exactly. And now we can take advantage of the market as a buyer. So you lose a little bit of equity in your house, but so what? Because you're going to be paying less closing costs. You're going to be paying lower property taxes. Yes, your PITI, your total monthly payment's going to be higher because your interest rates go up. But again, we've known this for the last 100 years. Interest rates go up and down. And when the interest rates go down, then you call Hector and refinance the house.
Of course, absolutely.
Right. And yeah, it's going to suck. But, you know, it's never easy buying and selling a house in a crazy market. Right. Now that the market's cooled down, you have the options, you have leverage, you have the power as a buyer, which you hadn't had in, I mean, even before 2008, right?
It's more critical than ever to really be working with people who really get it, right? I mean, and that's evident, I think, with a lot of price reductions. And I hear it often with you know, frustrated agents where, you know, maybe their client isn't taking their advice, right? And I think on both sides of it, whether you're buying or selling, it's more important than ever to be working with someone who really understands your local market and can advise you correctly.
It's somebody that's been in the market for a long time and understands the market and is not going to freak out and disappear. I sold a house down in Morgan Hill and that agent has disappeared, and I am just, yeah. So what's your thought on Sprout?
Sprout?
Yeah.
The mortgage company that closed their doors.
Yeah.
Well, I mean, that's the reality, right? The market is shrinking. I mean, I heard a stat last week. I mean, our business is down about 60% as a whole, 60%, right? Because, I mean, obviously refis are pretty much non-existent. And remember, we had a boom, right? So we had lenders hiring at an alarming rate, really as quick as they could to try to meet the demand, right? And so we were in a tremendous like growth mode. And now that the market's contracting, you know, obviously interest rates has gone up, so there's no more refis. Purchase business is still relatively strong, but it's just, you know, overall the industry, there's much less demand, right? And so we're seeing, and you will continue to see lenders laying off people. It's just sort of the reality of kind of a contracting market.
Yep.
And as a result, we'll also see, unfortunately, lenders that overnight will close their doors, just potentially because they're just not structured or financed correctly. I think in the case of the lender you're mentioning, I mean, those are non-QM lenders, so they're kind of more creative loans, if you will. And, you know, on the secondary market, if there's no appetite for investors to buy those, guess what? Like they can't finance them. Because remember, lenders in essence borrow money, right? They bring in their own money, they borrow money, they lend loans, they fund loans, and then they basically package them and sell them on the secondary market to free up capital to be able to continue writing loans or funding loans. And if there's no appetite to buy those loans, then we can't fund any other loans. You know, what's really frustrating or difficult is there's a lot of people that were in contract. There was a lot of people that were about to close on their loan, and overnight, guess what? They're not closing. Those wires aren't coming, right? So that's what's really unfortunate with stuff like this. Also, with people losing their job. The reality is, it's going to happen. It's kind of expected to happen. So it shouldn't be. I mean, it is a little bit scary, but it's kind of what's going to happen, right? So we just have to be prepared for that.
Yeah, and that's again kind of goes into the next button or bullet point. Again, there's going to be lenders, loan officers, loan originators, and agents that exit the market. They're like, I can't make ends meet. I can't close a deal. I don't know what's going on. I just don't have the experience or the wherewithal or the background to be able to back myself up for the next, could be 6 months, could be 3 years, could be 4 years, right? There's going to be a lot of people. And I don't know the exact number of how many real estate or realtors there are, but we could say that there's 18,000 realtors. I have a good guess that it's going to shrink down to about 10,000. That's just in Santa Clara County.
That'd be substantial.
Well, I think you're going to see the same thing in the lending industry too.
Yeah, sure. It's not as easy, right? So,
I mean, last year you could just be standing still and you hit a couple refis, right? Because you were just like standing there at a bar and you're like, what do you do? I'm a loan officer, right? And all of a sudden it's like, hey, I need to sell, I need to refine my house down to the historic low of less than 2% or whatever it was. Yeah, no problem. Boom, done. Right. And we saw that in 2008. We saw that the market kind of flip around on 2018. That was kind of just a weird couple. It was like 3 months, right? It was like, and then it took back off again.
Yeah, much of the same, right? Like interest rates went up. It affected affordability. Prices were up, right? At that time, the highest they've been. And we just saw, I mean, at some point, when rates go up, it affects affordability. It's going to unfortunately remove certain buyers. It's going to make making an investment less lucrative, right? Potentially, so you'll have maybe some investors slow down or back out. It's just what happens, right? Real estate is the prime example of supply and demand, right? And so the balance of rates and everything else are going to really affect investors, buyers, consumers in general, buying and selling. And what's happening right now, I think, despite all this kind of negative stuff we're talking about, I think is really positive, because we really need a balanced market. I mean, seeing double digit 20+% appreciation, seeing houses go over. I mean, I was involved in a house that went $1 million over here in one of the local communities, right? So, that kind of market is just unrealistic and crazy, and
yeah, they don't worry about the day-to-day rates, right? They're just like, here you go.
Well, at the time rates were really low, right? So that's really what added the fuel to the fire,
Right.
So
right. When I do my charts, when I do my numbers, I don't look at houses over 2 million, and eventually I'm going to raise that to probably 2.5 to 3 million, because anything over that's the luxury market, and that's a totally different animal compared to buying townhouses and condos and single family homes for the typical Silicon Valley.
Average home in San Jose is about 1.7, 1.8, isn't it?
It's actually 1.4 median and 1.4 and change 23, 1.4 23 on the average this last week. So, but again, I'm not looking at anything over $2 million. So that median drops down quite considerably when you have, I want to say we have 4 or 5 houses that close well over $2 million every month.
Oh, yeah.
So that would skew the numbers. And I also don't look at houses under 3 bedrooms, that kind of thing. So, so I do have something, if you're watching this as a hook, I know this is a little fun little meme here, but as a hook, I have a question, and I popped it up on Facebook the other day. What's the number one reason you should ask a realtor before you hire them? And I'm not going to tell you now because it's behind my curtain here, but I want you to come and watch me on Wednesday. And Hector, you're always welcome. You just jump on and do it. We're going to go through my list, and we're going to talk about headlines and what's going on in different areas. And I just started this new short too, and it actually got me like 22,000 views on TikTok.
This right here?
Yeah, this one right here. I don't want to play it, but I'll play it on the walkout, I guess. But
I'll check it out later.
Yeah. So, dude, Hector, I'm glad I finally got you on the horn on this. This has been
I really appreciate it, Vito. I love all the content that you put out, and you're a tremendous pillar in the community. You've always done a really good job in our area there in South San Jose and San Jose alike. And like I said, I really appreciate the opportunity. You're always putting out good stuff, and I'd love to be a part of more of it. So please feel free to reach out. I'm always willing to jump on and at least give my perspective of what's happening in the market.
Well, it's super important to have you live here, you understand this, you've grown up here, you've raised kids here. You understand much more than just rates. And that's what's important for me, why it's important for us to have these conversations so people can see us talk about it. Yes, it's a little bit of marketing. Yes, we're trying to earn your business as a viewer. Absolutely. But at the same time, this is more like internal talking. This is the dialogue that we have every couple of weeks whenever we talk on the phone. So it's just great to have it online for us. So,
Absolutely.
all right, dude, it's 9:30. You have a good rest of your week.
Awesome.
Happy Monday.
Thank you so much. Appreciate it. We'll be in touch.
And we'll see you out there.
Right on.
Bye. Hang on. I have to go here. Where am I? Blank. It's just a thumbnail. Okay, we'll see you. There it is. We'll do that again.